I find many business owners focusing more on sales activity and the handling of operational issues of the firm and seldom give time to finance and accounting function of the business. In this video, I am going to share the 7 mistakes that are made by the business owner in the finance and accounts functions which need to be avoided. Hi, my name is CA Jithendar Patel and I am on a mission to help entrepreneurs with financial advice to build a profitable business. Number 1. No clear demarcation of responsibility. A proper role clarity document consists of role definition, tasks and activities the employees is expected to carry out, and the measurement criteria or the key result area which is expected out of the role must be clearly defined. For example, task and activities of a telecaller is to make sales call in a day, and the measurement criteria could be like number of calls made, number of meetings arranged, etc. This kind of detailing is not given by many business owners to their employees, and this lack of clarity could put brakes to journey of the business success. Hence, the business owner should see that the proper role clarity is given to the team members in finance and accounts function. This is one of the key mistakes to avoid by the business owner, failure of which may hurt the culture and growth of the organization. Number 2. No monthly review. The head of the department of the accounts is expected to review the monthly financial statements such as profit and loss, balance sheet, cash flow statement, and the MIS generated by the accounts department. In the absence of HOD, it is the duty of the business owner to review the same. The process of review helps in reflection as what was the target, what is achieved, what is not achieved, what was missing, what could be done differently, etc. Unfortunately, this review does not happen in many SME enterprise on a fortnightly or a monthly basis, and it is done only an year-end for the purpose of filing income tax return and to fulfill the government statutory requirement. In the absence of reflection, the decision taken without considering the accounts data may lead to bad or ineffective decisions. The functioning of 7 functions of the business to achieve the business aspiration is hampered if there is no periodic review of these functions, including the finance and accounts function. Number 3. No reconciliation of accounts. Reconciliation is used by the accountant to explain the difference between the two financial records, like between the bank statement and the bank accounts in the books. Trade payables, trade receivables, bank account must be reconciled on a periodic basis. The absence of the same may enable for the frauds to penetrate. Reconciling of the accounts also helps in avoiding errors in the books of accounts, like recording purchases twice, making payment twice, etc. 4. Focusing more on sales rather than profits. Other mistakes made by the business owner is to focus more on increasing sales rather than on profit. They think that if there is more sales, then the profit will automatically increase. Many startups fall up in the trap and may have to either shut their operations or will have to sell off their business to some other companies. Many a times, the sale price of the product increases only marginally, but the cost of product keeps on increasing constantly. With this, company is bound to lose cash consistently instead of generating any cash from the business. In this situation, the business owner does not take home any salary, instead of puts in more from other sources to keep the business going, with a hope that the business will turn around one day, and that will never happen, as the same way of doing things will yield same results. Number 5. Ignoring data generated by the accounts department in decision making. The business owners remain busy firefighting daily activities of the company so much that he forgets that the data generated by the accounts department can be of a great assistance for decision making. Most of the decisions in the current technological world is taken based on the data. The product most sold during the month or year can be identified with a click of a button. Hence, the business owner should himself learn as to how to process the data available with the accounts department, or hire an external agency to process the data to generate meaningful reports. Number 6. Inadequate financial planning. The business owner does not know how much money is coming in and how much money is going out. There are no budgets and goals planned for the business. No review of the financial plan is done periodically, let's say on daily, weekly, quarterly basis, and this should be avoided. Number 7. not taking external help. Business owner, in order to save costs, try to do everything by themselves, which includes replying to the tax notices of various departments like GST, income tax, etc. These works may be sometimes entrusted to accountant of the business, who may not be skilled in handling these notices, and as a result, he spends more of time in replying and representing to the department, ignoring other daily tasks like recording of day-to-day transaction, etc. As a result of this, his daily tasks and activities gets affected, which may in turn affect the outcome expected out of the accounts function. Hence, it is wiser to outsource certain critical works to external professionals like CAs and tax experts, who with their knowledge and skill can execute the works in much faster and effective manner. So these are the 7 mistakes which are to be avoided by the business owner in the finance and accounts function. If you find this content useful, do share it with your friends. For more informative content, do like and subscribe to my channel. This is CA Jithendar Patel signing out. See you in my next video.